How's it going, guys? I hope you've all had an excellent week. In today's video, I'll be talking about why I think the market bottom has not been reached yet. We'll be looking at three different factors: inflation and the Federal Reserve, consumer confidence, and the potential for layoffs going into 2023. And then we'll look at the current housing market and why I think things are going to get worse before they get better. So with that being said, hit the like and subscribe, and let's jump into the first one. So the current inflation rate. The Federal Reserve is going to continue taking an aggressive approach to raising interest rates until inflation is under control. Now, the consumer price index for September is going to be released next week, October 13th, and that's going to tell us whether inflation in general is getting better, getting worse, or staying the same. Now, the Federal Reserve has already stated that they're going to continue raising interest rates by 1.25% over the next several months going into 2023. So it's easy to see that the Fed is going to continue their hawkish approach, their aggressive approach to raising these interest rates so that they can attack this inflation. Now, what's going to happen over the next 3 months, and this is where the consumer confidence comes into play. We are going to see the next three big holidays, which are Halloween, Thanksgiving, and Christmas. Now, Christmas being the biggest spending US holiday, this is going to determine just how bad the layoffs are going into 2023. Just recently, my family and I, we went into 3 different Halloween stores, and we went into a Target, and we noticed that there is still, with 3 weeks to go till Halloween, there's still a lot of product on the shelves. So there aren't these products being moved as much as I thought they would be. So this holiday season, I think people are going to be cutting back in certain areas. Now, we recently went to eat out at a pizza place, and we had to wait an hour to get a table. Now, don't necessarily think that this is due to a lot of people eating out, but it's more so related to people not working in the positions of cooking and being waitressing, because they are looking for higher paying jobs. So this wasn't necessarily because there's so much demand for eating out, but it's going to be interesting to see over these next couple months just how consumers change their spending habits because of the increase in interest rates and the increase on interest on credit cards. So it's going to be interesting to watch that. Now, the third thing that I want to be looking at, and this is going to be the housing market. We are starting to see signs of cracks in different housing areas in the US, potential bubbles popping. And I recently came across this article from the New York Times, which talks about mortgage rates continuing to soar, and housing market is taking a hit. So as the mortgage rates continue to soar, which they recently just went above 7%, it's crazy to think that a year ago mortgage rates were at like 2.8%, and now they're at 7%. And as this continues to happen, demand for houses are going to go down. And obviously what's going to come with that is the reduction in prices. And one interesting thing that they talk about in this article is that, why am I not on this page? Oh, don't advertise on Google Ads. Let's go back to this page here real quick. One interesting thing that they talk about is that if you purchased a house in August of 2021, when the mortgage rate was 2.88%, if you had purchased that same house today, you would be paying an extra $1,000 a month. So people are going to be holding off on purchasing these houses now, and this is definitely going to be lowering the rate. If you look at the housing, at the consumer confidence, so depending on how consumers are affected with large retailers and companies cutting down on costs, which will lead to layoffs, this could potentially start seeping into the housing market, and people aren't able to afford these mortgages, and you'll start to see cracks in the economy. But I do not see the same housing crash as 2008. This is going to be on a much smaller scale, but the housing costs are going to come down. It's just inevitable. So with that being said, one thing to realize, everything that I just said right now is noise, and purely noise. There's nothing else to it but noise. And what we need to be thinking about is continuing to purchase beaten down assets at their all-time lows. Because like in my last video, I stated we have bull and bear markets, and these bear markets will be followed. It's proven time and time again, 27 times since the S&P 500 was founded. 26 bear markets have been followed by 27 bull markets. It happens every single time. And if we take a look at this article, which I found here, and it talks about, it's an interview with David Rubenstein, one of my favorite investors, and he talks about why trying to predict the market bottom is usually not going to work in your favor. So having cash on the sidelines just sitting there waiting for it to go lower and lower and lower is very hard to plan, and that is why dollar cost averaging is so effective, because you find these companies that are beaten down and you purchase them at a little bit here, a little bit there, and you catch them on the way down, and that way you don't have to put all your money in at once when you think that the market bottom has been reached. And it's so much more effective to do that, and that is exactly what I'm doing. I want to motivate you guys. I want to inspire you to not have fear and to continue investing in these downturns, whether it be 20, 50, 100, $1,000 a month, whatever you can afford. Think of generational wealth and think of you and your family going forward. Look at beaten down companies, do your research, find companies and cryptos that you love that you can put money into and that will come out up over the next year or two. So guys, with that being said, that's today's video. Please continue to hit like and subscribe. I appreciate your support. I appreciate my subscribers. A new video every Friday. I'll be putting out a video next week with the consumer price index news release that comes out. So stay aware of that. And I'll catch you guys in the next video. Keep your head in the game. Look after each other. Keep investing. Cheers.